Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of GameStop, ticker symbol GME. And so here I am looking at the chart on Friday, May 17th, after the market has closed, and GameStop closed at a price of $22.21, being down almost 20% on the day and continuing down to $21.30 in the after hours. So it does seem pretty red if you do frame it like that. But if we do look at it from the weekly time scale, price has gone up more than 27%. And over the course of the month of May so far, price is up more than 100%. So I do think it is good to take a step back and look at it that way, because while we did see a pretty massive run up, hitting a high during market hours of $64.83, if we do flip over to the 4-hour time frame, price actually went over $80 a share, hitting a high of $80.07 on May 14th. And so if we do think about it like that, price has gone up a lot this week, and we can see from the lows of right around $10 a share going up to 64.83. That represents an increase of about 550%. Getting up to $80 a share, that represents an upside move of over 700%. So pretty remarkable what we have seen over the course of the week. And, I do think that there is a lot of framing of this, that price has come down from the highs of 64.83 to the close of today. Price has come down about 65%, so that does seem pretty bad. But I do think it is good to take a step back. And one of Roaring Kitty's memes, I do feel like, suggested that. And so this is one that he posted, which is an image from Butch Cassidy and the Sundance Kid, which is actually a movie that I have not seen. And so I did look to this analysis of the image or of that scene, and I do think it does provide some perspective. And so this analysis goes over how was the famous "They die in the hail of Bolivian bullets" and optical done. The stills show the progress of the scene. They run out of their bunker in a color mid-shot, which zooms in tighter, freezes, then fades to sepia. This pulls to reveal a giant wide shot. So I feel like a lot of us do focus in on the charts. We do focus in on the nitty-gritty details of the intraday price action or what happened on the daily time frame, which is what I focus on. But if we do take a step back and look at the full frame, I think that we can see something pretty remarkable. And so I'm just going to switch over to the weekly time frame so we can get all of this in the picture. And looking at this, we can see that we have broken out of two notable downtrends or falling wedges. So here we can see this downtrend going back to the high hit on November 5th of 2021. We've had multiple tests of that level. Recently, we did break out of it, but not to any notable extent until we pulled back to test that downtrending level of support, and then we launched. And if we do look at this other downtrend, going back to the highs hit on January 29th at a price of $120.75. So from that point and connecting it to the high over here that was hit during the week ending on March 28th of 2024, we just recently broke out of that downtrend on the week ending May 3rd. And actually, during that week, we did close above a pretty important level. I had pointed out that max pain on this day, May 3rd, was $11 a share, and closing more than $5 above that price, closing at a price of $16.47. I do think that prompted a gamma squeeze, which we saw take place over the course of multiple weeks until it couldn't contain itself, and then we saw this massive move up. And we have since seen a pullback, and unfortunately, if we do look at the closing price and we do look over at the max pain for the day, the max pain for today, May 17th, was $25 a share, and unfortunately we did close below it. However, if we take a step back, we closed at a level we have not been at in months, going back to July of last year. So I think that's pretty good. We should not let that pass us by. And also from a retracement that I did here, Fibonacci retracement going from the low of $9.95 going up to the during market hours high of 64.83, we can see the 786 here at a price of $21.69, and we closed above that. We may be below it during the after hours trading, but I don't think we should think about that. We closed the week above a key level, and we have formed what looks like could be a hammer candle, suggesting that we may be seeing a reversal in the week or weeks ahead. And so what I think will be happening is that we may see some consolidation. It may be over the course of 1 week, it may be over the course of 1 month or more. But during that time, even if we get down to $18 a share or $15 a share, I do think those will be dip buying opportunities, as $15 was a level that we needed to claim. Max pain was $11 a share just a couple weeks ago, and we're well above that now. We're more than double that now. So even if max pain is $25 and we close below it, we are still putting in higher closes than we were a few weeks ago, and I think the result of that may be some consolidation, which will represent dip buying opportunities before the next big rally. Because why would Roaring Kitty be still posting about this even if we've seen this pullback? This is all a part of it. This is a dip buying opportunity before the next big rally. And so I don't plan on missing out on that, and I hope you don't either. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.